What have you walked into? Blackham was sort of struggling for a long time. Why did you take over 10 months ago? Why are you best suited to turn this thing around? Are you doing everything that you want to be doing? Are your hands tied anywhere in terms of the plan? Don't hit me with that, oh, it's a catalyst moment. What's meaningfully going to make a difference to the business? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. It'd be much appreciated. And do leave your comments below. It helps us understand the sorts of questions you want us to ask companies, how you think we're doing, and of course, what you think of the company. And for those of you who want to listen to the podcast, you can get that on cruxinvestor.com, along with an article and the transcription. And of course, for our Crux Club members, you have early access. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Milan Jerkovic, CEO of Blackham Resources, actually soon to be Wiluna Mining. They're a Western Australian gold producer, about 60,000 ounces at the moment, but aiming for 300,000 ounces a year. We talk about how he's going to do that. So Milan has walked into a bit of a turnaround story. They came in 10 months ago, having inherited a bit of a mess. The company, Blackham, had previously spent $200 million, and in fact, the two previous owners had also spent $200 million. So a lot of infrastructure, a lot of data, luckily, and he thinks he can turn this around. This is a low-grade oxide story versus high-grade sulphide story. He's got to work out that mix, what he's got to do that. I think the first thing they've done is implement a 5-point plan. One, sort out the balance sheet. Great. Two, look at operational cash flows. Then they want to sort of transform the business into a gold concentrate operation. Okay. Fourthly is obviously expand existing production and then look at exploration as well. So those are the five kind of key drivers. Worth understanding those. We get into that in a bit of detail because I needed to understand how he's going to deliver it, what it's going to cost him to deliver that, and indeed if they can. So do take a look at the description below. Lots discussed, as I say. If you want to look at anything in particular, click on the number. That's a timestamp, and I'll jump you to that part of the video. But enjoy what Milan has to say. Milan, how are you doing, sir?
Well, thanks, Matthew.
Well, thanks for joining us from sunny Australia, and it's late at night for you. We were introduced by Simon Catt at Arlington, and in fact, we've also met a few years ago in Zurich. But I haven't heard this story from you before. So can you give us a 1-minute overview on Blackham Resources / Wiluna Mining, and then we'll pick it up from there.
So we're a gold producer in the middle of Western Australia. We're producing about 60,000 ounces of gold at the moment. We're in 10 months into our program to clear out the company's balance sheet, which we've done, and reset our production profile with a view of building a concentrator, which will be able to allow us to treat our largest resource base, which is our sulphide ore body at Wiluna. We have 1,600 kilometres of ground in the northern end of the gold fields in the Kalgoorlie-Norseman gold belt. We have 6.4 million ounces of resource. Half of that is inferred, half indicated, about 1.4 million ounces of reserves. And we're in a very aggressive drilling definition program. We have 7 rigs on site at the moment, 4 on the surface, 3 underground, drilling out and improving our immediate startup plan for the concentrate production, and then looking to long date that further and look at further scaling the mine up. Our aim is over 5 years to, in a stage way, go from 60,000 ounces to 120,000 ounces of production to 180, and then all the way to 300,000 ounces of production of a well-known resource base, but it needs further drilling to improve the grade and increase the reserve component in our resource inventory.
Big plans there, but let's go back a bit. I want to talk about what happened at Newmont, Apex, Agincourt. What did you walk into? Because you've been at this 10, 11 months now. So why Blackham Resources, as it were? In fact, when's the name change? Just so we get this. What do you want to be called? Wiluna or Blackham?
So the official name change has been approved by shareholders and it's happened.
Yeah.
But there is a process from the ASX going on so that we can get trading on the ASX platform, and that'll be sometime next week.
Okay.
We will be officially Wiluna mining, and that starts within this next week.
So let's go with Wiluna for the sake of this, okay? Because people will be watching this next week. Okay, so Wiluna mining. Right, so what did you walk into? Because obviously the couple of companies were there before you. It didn't work out for them, so obviously you knew that. So why take this project on?
Well, the main reason I took the project on is I've been there as a non-executive chairman for a while and an executive during a fairly difficult time in the company's history where it financially got itself into some strife. It had to use its contractor to fund itself through to middle of last year. And it became obvious that we needed to do a fairly thorough cleanup of the balance sheet and reset the plan and the management. We were trying to mine short-dated reserves, and we were going from feast to famine. There was no redundancy in the balance sheet. There was no redundancy in our mine plans. So we've done a lot of work to try and long date the cash flow for the next 18 months for what we're doing today, and pave a path forward with spending the money in the right place to increase the length and strength of the cash flow profile of the known resource base. The company had done a great job taking on from the last owners. We talked about Apex, which was a company that owned part of these assets. Wiluna, in fact, is the first, or Wiluna Mining now, is the first company in history to actually consolidate all of the assets into one company. In the past, back through from the 30s into the 80s, we had Australian Barrick, we had Normandy, Great Central, Newmont, and Oxiana all had small portions and times of ownership for parts of the assets. When Blackham, as it was called, now Wiluna Mining, put these assets together, it was a startup company. It had a small balance sheet. They only raised enough capital, took a lot of debt on to get going with just a free milling circuit, and they didn't touch the largest resource, which was sulphide, because they lacked the capital to tackle that. So really what's happened is because of that, and because of the fact that the balance sheet didn't allow the company to move forward, the first thing we had to do was retire all of the debt, which we've done, clear up any structural issues with the balance sheet, which we've done, and we now have put together a funding package of $52 million of equity. A lot of that went to repaying the debt and normalising our creditors, and then we have another $21 million of debt that we're trying to close at the moment to complement that, and a further $40 million subject to some work in the next 4 months to allow us to execute now in a staged way with enough liquidity buffer in our balance sheet and actually bring forward an ability to actually unlock what is one of the largest dormant geological systems in Australia.
I understand that, and I do want to actually get into the weeds there with you on your 5-point plan, which touched upon some of the things you've just talked about. But just sticking with, what is it that you walked into and what you inherited? Because obviously, if you look at Apex, Agincourt, there's a couple $100 million spent. Blackham themselves, a couple $100 million spent. So there's a lot invested into the infrastructure and in the assets. There's a lot of data there too. So you were brought in 10 months ago, and then you've kind of brought in your management team. I mean, how did that work? You've been involved for a while, but why did you take over 10 months ago? Why are you best suited to turn this thing around?
Well, my history has been in building or turning around unloved assets in the cycle. And essentially, I saw the potential here at the right time in the cycle, in the gold cycle. I saw the scale that allowed somebody to build a take out of this, and it needed somebody to put their own money behind it. I put some money behind it as well to get to the next stage, and we needed to take a longer term view. But we needed to get supporters, financiers behind us, shareholders that were prepared to see the deep value through all the problems. And I took it on because I felt that the opportunity had the turnaround potential and the scale, if done right, to produce returns for shareholders that are well in excess of 10 times the money in the cycle. And yes, I had to then go and bring in, for the scale of the asset and the opportunity, I had to go and fix the immediate systems, the compliance to plans, fix the plans up, and bring in a management team that was capable of taking on a opportunity that's actually quite large scale. I mean, we're talking about developing an underground mine in WA that's going to go to 1.5 million tonnes per annum over the next 4 years. That requires good planning. It requires and good execution. And the first part of that is obviously the right people. One of the gentlemen I brought in is a bloke called Milan Meadows, who's actually on site. He's managing the immediate business improvement and the construction of the concentrator, which is going to happen starting September. And he's a person that's had, he turned around the Murray assets, the nickel assets in WA for Glencore. And he's got both project delivery and project improvement experience that allows me to do what I'm doing, which is the long-term planning, the geology, the funding, while he's making sure that, in fact, we have a site that performs and our next stage of execution can be delivered.
Okay, yeah, and I do want to get into oxides versus sulphides and, the plan of attack for sure. But maybe now's a good time to actually get into the weeds with regards to that 5-point plan. Okay, so you've talked about strengthening the balance sheet. What have you walked into? I keep coming back to that because, Blackham was sort of struggling for a long time. I'm not sure shareholders were kind of seeing the types of activity, returns, thinking that they wanted. So I'm intrigued. I love a turnaround story. So I'm intrigued by precisely what you're doing, because if I sort of sit around and read, what the retail guys are, I know this is 50% institutional plus, but the retail guys are quite interested in what you're doing. They're also slightly confused. So I think it's worth spending some time just breaking down that 5-point plan. So let's start strengthening the balance sheet. What do you mean by that?
Yeah, well, we basically, through Cashflow, selling some non-core assets, we sold some of our tenements around our Lake Way area to a company called Sulphide Potash last year. And that was really to retire. We had over $20 million of debt. We had creditors that were out to the tune of $25 million. So when I talk about strengthening the balance sheet, I mean repaying all of that debt, normalizing creditors to 45 days. That came through some equity raising last year, some asset sales, and then the final part of that was this capital raising we did in February. And that gave us, now we are debt free at the moment, although we have announced a gold prepay facility that's in 2 tranches that we're looking to execute with a very large global oil trader out of London called Mercuria. And that'll then give us a clean debt arrangement where our main contractor is not our credit provider. And if you don't have a clean balance sheet and your contractor is your funder, it's very hard to get proper commercial discussions.
You see, just so I understand the numbers here. So you've raised $52 million as equity. Was it about that?
And we raised another 7 last year, and we also sold about $20 million of non-core assets.
Right. Okay. And you've got a debt facility available to you?
Yeah, a debt facility that's notionally $61 million, but credit approved to 21, which we're working to draw down this month.
And obviously you've got cash flow coming through the company as well because you're producing.
Well, we're looking at about 40 to 60 million a year, depending on the gold price. And we'll just keep that going up until the point we commission our concentrator, which is a new production stream.
We'll come on to, I promise. I just want to set the scene there of the numbers for people, okay? So the second thing we talk about is increasing operational cash flow. I guess there's only one way to do that: costs down and production up. So what are you doing?
Yeah, so what we've done is gone and spent the last 5 months has been about pre-stripping longer dated pits, so that in fact we have stable production for the next 12 months rather than going short-term production, which was the case. And yes, bringing costs back down, they're up over $12 million a month. We're now, as we've done that pre-stripping, we're now aiming to reduce our operating expenditure to about $8 million a month while producing about 6,000 ounces of gold a month.
Right.
So that gives us a nice cash flow margin on a monthly basis. That from, as I say, from this month, having invested to get to this point, will be a steady state cash flow stream. That also is part of the improvement plan to get to a more longer dated cash flow through this transition period.
Right, okay, and you're indicating an ASIC, and I'm going to do it in US dollars, not Aussie, just for the broader audience who sort of usually look at it this way. So you're looking at about $1,070 to about $1,200 US bucks for an ASIC, but you're giving yourself a bit of room there. What are you aiming to reduce that by?
In this current 3 million stage, this transitional 3 million stage, we're going to be about that, in that range. As we expand production, really we'd like to see that, 1,500 Aussie and then down in stages to about 1,000 to 1,200 Aussie, which on an exchange rate basis, you're talking about 700 to 800 US, but that's probably 3 or 4 years away. In the short term, in those stages, you're hopefully hoping to get sort of $100 increments as you increase in production. So that you're still generating that sort of, at 120,000 ounces of concentrate production, which is where we're going next year, we expect to have the cost below 1,500 Aussie all in.
Okay, so you look like anyone with a turnaround story. You're looking at shaving those costs. And we'll come on. I think because the oxide sulphide jigsaw that you're solving there is going to be, and in terms of open pit and underground, that's part of the equation. So we'll come on to that. But first, you mentioned something there, gold concentrate. That's a big deal for you. Why?
Well, it's our largest drill resource, and it's sitting right under our head frame. There's 5 declines into this ore body. There's 100 kilometres of development, and past owners have spent a lot of money and then converted it into a mine plan. And with the current gold price, and there's 3 things that have moved the dial for this sulphide resource. 3, but let's talk about 2 that are obvious. The gold price has significantly increased from when people looked at last, and there's some capital that we can immediately leverage off, and the gold concentrate. So we have a BIOX plant that's on care and maintenance on site, which operated for 23 years, which is a different method to taking concentrates and converting them into gold. Because the gold concentrate market has become so competitive in the last 12 months, we don't have to do that step. So there's a unit process we don't have to worry about. All we're doing is no different to a copper mine. We're producing 750,000 tonnes of underground ore, eventually 1.5 million, running it through a concentrator, producing a concentrate between 65 and 85 grams gold, and we sell that directly to the market. And we've already sold 3 years to very large counterparties. One is Trafigura for 30%, and the other party is a company called Polymetal. They're actually listed on the main board in London. They're the largest processor of sulphide ore in Russia. I think they're about 7 billion sterling company. They're a very large company, 1.5 million ounces of gold production. They came to us to talk about long-term supply into a stage 2. They're building a new pressure-rich plant to actually take their ore, but they're looking for large supplies in the Pacific region to supplement that going forward. And their engagement with us is all about Wiluna providing some of that scale going forward to supply long-term their processing facility. And they are also very large sellers of concentrates into China. So they see the whole market, and we've got a very good relationship with them. And that's really given us the confidence that the product we're going to produce has got a market and it's got a very good price today.
Okay, so that's some of what you're doing for this transition into gold concentrate. What are the kind of long poles in the tent for you in terms of delivering that? Because, like I say, it seems to be a cornerstone of what you want to do.
So that's a good question. We've got a bit of a hiatus in the construction phase. The construction of that concentrator was meant to start around April, May, but because of the COVID-19 issues, and we didn't want to start mobilizing contractors and then have delays. And then we had to go. So we delayed the start of the actual concentrator until September, October this year, which means the first production was meant to be in March next year of concentrate. It's been pushed out to September in 2021. In the meantime, we haven't stopped the dewatering of the mine. The drilling to improve the reserves in the mine plan is all happening. So we should have the mine well ahead of the concentrator construction, which means it will give us redundancy in the mine plan. It will also allow us to put more reserves on the table. In fact, we put some announcements out recently on some of the shoots we're drilling. And the other exciting thing about it is that what that drilling is going to do is not just increase the volume of reserves around the initial development that we're planning. We found that next to development 80 metres away in places, we are now currently drilling 4 areas that are new shoots, totally new virgin shoots from the surface that potentially have a higher grade than the average that we have in our inventory, which is 4.7 grams. And if we can lift that grade as well as increase the confidence of the reserves around where we're starting, every gram additional gives us 25,000 ounces of production a year from the same infrastructure, the same process. So it's a massive leverage to the economics.
Well,
so the main focus right now is to increase the grade and the reserves around the immediate startup areas for that sulphide plant.
This is where it gets really interesting to me, okay? Because you're talking about expanding production as the 4th point on your plan, and the 5th point is obviously exploration. I think they're slightly entwined here from what you've just said, but you've got to solve this balance between oxide production, sulphide production, grade, with the high grade underground, and of course the lower grade open pit. So tell me about that big organic jigsaw puzzle you're building, please.
Okay, so right now our mining operation is a couple of open pits that are producing reasonably modest grade 1.3 gram material and a small underground mine that is hanging off the same infrastructure as this large sulphide Wiluna mine. And that small underground mine is producing about 10,000 tonnes a month at about 5 grams. And we're doing it, there's an announcement that went out only a week ago regarding that golden age ore body. And that golden age ore body will give us a sweetener for this cash flow in the next 12 months, but also becomes an ongoing producer if and when we decide that we're going to operate both the free milling and the sulphide circuit together. The current plan as it stands, and we'll have a lot more to say to the market in September about this plan, only has one crushing milling circuit. So you either process free milling or you process concentrates. The ideal outcome will be, once we do this, and that's why we're doing all this drilling, that we can define enough inventory for the free milling circuit to continue and enough confidence that the reserves are long dated enough for the sulphides to actually build a new crushing milling circuit for the concentrator. And given that you've got both ore sources that you're mining from the same environment, basically, you want to be able to process what you mine. That's how you can optimize your mine plan. So we would expect to be able to deliver a plan to the shareholders in the market sometime in October this year, that while we're building this concentrator, this first stage concentrator, that we're also going to be looking at some point in 2022 having a front end for both circuits and both circuits operating concurrently. If we can deliver that, 60, 70,000 ounces from the free milling circuit and the 120,000 ounces from the sulphide circuit, we immediately add 180,000 ounces before that stage 5 portion you talk about in terms of scaling the sulphides up to whatever scale they should be. Fantastic,
understood. Big plans, but that's going to cost big money. I mean, how much is it going to cost for the sulphide expansion project? And then, of course, if you're going to have 2 circuits, that's going to be more money again. Is this all debt?
So the sulphide stage 1 concentrator circuit and mine development is basically funded from cash flow and the mercurial funding we're working on at the moment, which is a 61 million in 2 tranches. We've got to perfect the second 40, but the drilling, we're pretty confident that the drilling will provide the financial model with the reserves to draw down the second portion sometime over the next 6 months. We are doing a scoping study and some reserve work on the next stage beyond that. And that's what I'm talking about. Now, the next stage beyond that probably needs another $50 million of funding to build a crushing milling circuit for the concentrator. so we can decouple the plants. Obviously, the cash flow we produce will determine when and if we need to top up funding for that plan. But we probably don't need to look at that until for another 12 months, essentially, in terms of when some portion of that funding is going to be required.
Okay, well, this kind of leads on to what's the game plan? You know, you sort of described the order of play there, which is good, but what's the game plan? Because you don't necessarily, because you're talking about increasing operational cash flow, but you obviously don't want to keep plowing money back into the ground. You want to build up in a cash position, give yourself some optionality, right?
That's right, but that's interesting. One of the things that the shareholders we brought to the register now are pushing us to do, you'd be surprised, they're actually pushing us to, we've got 7 rigs on site. Given the scale of geology we've been defining in the initial results, our just under the head frame targets just at Wiluna, plus there's a new thing we're looking at the moment called Region, 8 kilometres away, multi-million ounce undiscovered opportunities that are extensional, and we're dealing with very shallow. I mean, Wiluna has a 5 kilometre long system with a very broad outline. It's on average, given that we're finding shoots that are starting from the surface amongst all that, the system is probably only drilled to 300 metres. It's one of the largest undrilled systems in Australia. So our shareholders are saying, well, you need to define the scale. That has as much value as defining the cash flow stream in a staged way. So it's going to be very interesting how well the market supports what we're doing and whether, in fact, we increase drilling towards the end of this year and start to tackle some of the bigger underhead frame discovery opportunities beyond just converting. Most of our drilling at the moment is converting resources into reserves, and that's very economic. Where our reserve conversion is about $30 an ounce, which is extremely because of the sub capital that's already there. So 2 aspects of it is that our shareholders aren't asking us to slow down, but obviously the market's going to have to come behind us to be able to run at the rate that we're running. They're asking us to consider in 6 months drilling faster. And we can drill faster once we establish our underground platforms across that 5 kilometre long structure and get rigs underground. We can start doing extensional drilling on the system. While we're obviously perfecting the stage cash flow, 180,000 ounces, and then sometime in the next year and a half, we'll have a first feasibility study completed to go to 300,000 ounces. And how we get to 300,000 ounces is to double the size of the concentrator and double the scale of the underground mine, which clearly the scale your body says you can do. We've got to finish the drilling to actually do the feasibility work to demonstrate that can be done.
Okay, so let's come back to my point, which is what's the exit plan here? Because no one wants to plow $1 billion of capex into the ground. You want the big boys to do that. So what are the pieces that you're putting together and the order in which you're putting those pieces together to make you more attractive to someone walking into this? Because aiming for 300,000 ounces is fantastic, but do you want to be building a huge mine complex and funding that?
Well, I've built enough large mine complexes, so that doesn't particularly worry me if the market supports me. So we're going to run our own race on that, and obviously there's a few bears hugging us at the moment, and I'm friendly, and that's fine. If they can show a compelling story to our shareholders that's better than the one we can deliver, then that's great. I'm a shareholder as well, right? So my job is to demonstrate the scale of the geology and prove that Wiluna is expandable to the scale I'm talking about, from what we know, and show that there's another 10 million ounces here under our head frame. If that means that our larger balance sheet is more likely to develop that quicker than us, and they want to join our shareholders in whatever way or pay them to hand over the story, well, that's great. I'm not going to stop to run an auction. What I'll do is engage the discussions if they happen. But the best way to create value is to show that you can do it yourself and run the race that you're running.
Okay, I buy that. So obviously a bit of change when you walked in, and you've just had a shareholder vote on a number of factors. Obviously, name change, rollback was a big one. Any pushback in the market from that? Do you think people understood why?
Not at all. I'm surprised because rollbacks can be a bit destructive in the markets once they're done. And I'm actually very pleased with how we performed. We've actually done very well. So I think the drilling results we're putting out is starting to take people's imagination. And if you look at our market cap, it's 150. We're producing 70,000 ounces of gold. We've got 6 million ounces of resource. We're in the middle of WA. There's a lot of development peers that I won't mention them because, that are valued with $500-600 million. They're 5 years from production. They only got resources. They haven't got. So we've got a long way to go, but we've also come from a low base with a company that's done a lot of construction to its brand. It's done a lot of the visibility of the geology, the scale of geology was absent because everybody was focusing on short-term profit and underperformance, debt issues, balance sheet that couldn't execute. We've cleaned that up. We can now draw a line in the sand and start looking not over our shoulder, but start looking towards the geology and pointing people towards the geology and the scale that actually we're sitting on.
Now you just signed up for it.
And that's the job we have to do. If we can't do that, we're not going to demonstrate the value that people should look at.
Well, I think that's what intrigued me, because you go into the chat rooms, you look at forums, you look at conversations, articles, etc., and there's a sort of, I think general acceptance and understanding of it needed to happen because things weren't going particularly well before. I guess you need a bit of time, bit of a runway to start delivering on some of these components for sure. So what should people be looking for next in terms of what's a meaningful? Don't hit me with that. Oh, it's a catalyst moment stuff. What's meaningfully going to make a difference to the business?
It's very clear what market will be looking for is to show that this last 5 months of pain on the operating side and the money we spent to elongate the immediate cash flow is real. So turn around in July and the next 2 quarters of production people were looking at, so that we're not over-promising, we're delivering. The drawdown on the debt, which should happen sometime in the next 4 weeks for the first tranche, 20 million. Drilling results, and we're separating the drilling results from the sulphide story that we're trying to demonstrate how it complies to our plans, deliver a scale operation, and the drilling on the 3 million to demonstrate that potentially that also keeps going at the same time. We have a resource upgrade in September, which will be significant from all this work. I mean, there's 15,000 metres of drilling a month, 45 metres a quarter at the moment going into upgrading all those numbers. There is going to be a scoping study on do we just run a sulphide concentrator or do we run both circuits? That comes out at that same time. So there should be, every quarter there should be at least 2 drilling updates, which are going to be significant. And then there's those other milestones, quarterly results in July, the debt and the September resource upgrades and a plan, the next stage for the plan. Okay. Forward.
Are you doing everything that you want to be doing? Are your hands tied anywhere in terms of the plan?
Well, we're okay at the moment, but once we get through this round, the next 4 months, and we do the scoping work on how fast should we be running, we may want to run faster, as I said to you, on the geology and the rate of defining where we're going, and maybe on some of the other headframe regional exploration that could actually show a much bigger scale. Because if we can show through drilling and geological work that in fact the scale of Wiluna is not just what we know to 500 metres, but there's another layer of it down to 1,000 metres, then it could change the dial on who's interested in us and what happens.
Okay. Milan, thank you so much for running through that. New story to us. Enjoyed that. Like I said, I like a turnaround story, especially if it works. So stay in touch with us. Let us know how you're getting on. You've got a lot of delivery. You got to deliver a lot this year. So, I wish you well with that one. Thank you again.
Thank you for your time, and I really appreciate the opportunity.